Hello, and thank you for joining us. I'm Sandy Franks, Executive Publisher of the Taipan Publishing Group. Joining me today is Kent Lucas, Editor of Safe Haven Investor. Kent, thanks for joining us. You have the most impressive financial background I've seen in a very long time. You've traveled to foreign countries, examining manufacturing plants firsthand. You've talked with Fortune 500 CEOs, and you've helped manage $1 billion worth of equity assets. I think it's a great background, and I just think it would be a great idea if you kind of walk through that a little bit for our readers.
Okay, great. Well, thank you. Actually, I'll go back a little further to give how I think. I thought I wanted to be an architect and an engineer.
Okay.
And I got to college and quickly turned down towards the economics path. And from there, I was fortunate enough to land a job on Wall Street at Citibank where, and this was, I won't date myself, but it wasn't the best job market at the time. And my first job was as a trust officer for Citibank, which had to do a lot with bonds and bond indentures. And then my second job was managing derivative securities, marketing derivative securities for their tax-exempt division. So my background up to that point was always fixed income and bonds, and I parlayed that into a fellowship for business school. And once I got to business school, I realized I liked the story behind companies and the investment rationales, a little more to it with equities than in stocks than there is with bonds. So I quickly became infatuated with equities research and investing. And so after business school, I landed a job at Capital Research Company based in LA, which is a quiet giant in the investment management business. And given their size and culture, they afforded a lot of responsibility to the analysts and portfolio managers. So,
you were one, right?
Yes.
Okay.
And so I managed across 6 or 7 different funds a total of $1 billion, which is a lot, even in today's terms. But after a while, you get used to it. But and then across several sectors as well. So I left there after, I think, 7 years and have been on my own ever since, and recently got excited about joining the Taipan team.
And we're excited that you're here. And one of the things that I like about what you're doing with Safe Haven Investor is that you've set this goal to beat the S&P 500. So I thought it'd be great if you just talk a little bit about that.
Yes, could be an ambitious goal given the nature of Safe Haven, which, as the name implies, is somewhat conservative. But there is a lot of flexibility that you've given me with the portfolio. So there are some opportunities for some more short-term oriented investments that should outperform and do really well. And I think that works well in this environment where the markets are very volatile and there's a lot of uncertainty. But if you think the S&P has, on average, returned under 10% over since last century, I feel pretty good that with some dividends and some yield added to a core portfolio, that's a number to beat. And then on the other end, the defensive nature of the portfolio should outperform the S&P in the down market, which you could argue we've seen in 2009, and we'll probably see again, that the defensive yield-oriented names or strategy that I'm thinking about will hold up better than the market in less favorable times.
Now, just talking about Safe Haven Investor and reading some of your recent updates, I think it was either this week, might have been last week, I was kind of surprised when I read something where you wrote that you were wrong about a company's upside, which is quite odd, but so I thought you should explain that.
Yeah, I was trying to be funny. There's a great saying, it's better to be lucky than good, and it's actually my first pick for the Safe Haven as the editor. And I think I'd said I expect 40 to 50% upside over 18-month period, 12 to 18 months or maybe 2 years. And in this market, like I said earlier, in volatile times, it was up 55% in 3 months. So I was right, in a good way. And I should say, from a long-term perspective, I still like that stock, but there's I felt, given the conservative nature of Safe Haven Investor, that taking some profits and 50% profits in any portfolio is good. So
it's very good, and that's the whole reason I wanted to point that out, because it was the fact that you actually did better than you thought. So
I can't promise that all the time, but that's a good start.
So since we're on the safe haven investor subject, let's talk a little bit about your system, if you have one, or maybe it's better to say methodology, how you pick the stocks. How do you find these stocks? I don't know if you're drawing on your experience of going around the world and looking at these plans, and you've talked to these Fortune 500 companies. So do you have a particular system in how you actually uncover these companies?
That's a good question because it's evolving. This is a different process than being a fundamental research analyst and manager, where, as you said, I spent a lot of time on the road, met with tons and tons of CEOs and C-level executives, and literally kicked the tires and driven cars and tractors all over
Right.
the world. So, and this is a little different investment process. So that's a bottoms-up philosophy, where you look at numbers, you crunch the numbers, you look at the fundamentals of the company. But what I'm finding myself doing with Safe Haven is combining it with a little more top-down, looking more at sectors, which sectors might be in and out of favor, and taking a bigger interest in the macro environment. And so it's an evolving process right now, but again, we're in some unique investing times, so I think that makes sense. You do have to consider what's going on in the world and what's going on in the industry and economic level as well.
Now, you just mentioned looking at certain sectors, so I'm just curious as to what you think might be a hot sector or something that investors should be looking for in 2010.
I think if you look at the sectors that have not done well, and healthcare is one for a very good reason, there's a lot of uncertainty.
Sure.
And I think I've talked about in one of my pieces about having visibility. You want to invest where you have enough visibility to have a reasonable guesstimate about the future and of earnings. So I think we'll get through that, as whether we have reform or healthcare reform or not, these stocks are cheap, and for the long term, there's some great opportunities, and especially some that have some potential nice yield. I do think the consumer will come back probably in the second half of 2010.
Okay,
that's a possibility. I don't think we'll have a double dip scenario. So some of the consumer discretionary stocks, maybe you see those coming back towards maybe later in the year. But the consumer staple stocks should do well, and a lot of them have done well so far this year.
And since we're sort of talking about the economy now, let me just, not to put you on the hot seat, but let me just ask you a question. It's on everybody's mind. Bernanke says, oh, the recession is over. We're definitely heading into recovery. Where do you think we are? Is the recession over? Have we reached recovery, or is there something completely different happening?
I think the worst is behind us, and I wrote about that in June. And looking in 2010, we need the consumer. And thus far, we've had clear signs on the manufacturing and industrial side that things are slowly getting better. But with the consumer being 2/3 of GDP, we really need her to participate. And we need jobs for that to happen, which will create confidence and will create spending. So once the unemployment picture turns around, which hopefully that's soon, we'll start to see the consumer contribute, and thus why maybe in maybe the second half of 2010 we'll see some signs of life from the consumer.
And so these are all the things that you're writing about in Safe Haven Investor, especially in your updates, right?
Yes. Yes, I think it's a very interesting time right now. You can argue the market's a little frothy, and a pullback, as we're kind of seeing on a shorter term basis, is probable, makes sense. We've had a great run up since March, but where we go next year is a great question. So a portfolio like the Safe Haven Investor gives us that defensive posture, which I like. You can think of some of the defensive sectors that have not kept up, like healthcare, for example, and look forward to maybe finding some surprise industries in 2010.
Well, our time is up. Thank you for sitting down with me. If you'd like to learn more about Kent Lucas and Safe Haven Investor, please visit our website, taipanpublishinggroup.com.